Hey, Noel, come to you with another video. I haven't been doing a lot of these because it's just been really, really busy. A lot of things happening in the housing market. And just for some context, I focus on the single-family rental investing world and landscape. The reason that I talk a lot about the overall housing market, the single-family home market, is because single-family rental investing and the single-family home market are tied together for good and for bad. As homes appreciate or depreciate, it affects the one part of the value of a single-family rental. But then what's great about single-family rentals is that home prices can fluctuate, but rarely does the rent in your single-family rental fluctuate down. So if the deal works today, it's probably going to continue to perform regardless of what the value is on the short term. But we have a lot of things happening in the home market today, so I'm going to unpack some of that. We've got values that we look at where the values are, where they're going. Are we in a bubble that burst? Are we in a correction? When was the peak of the market? So I'll start with that. The peak of the market, it looks like, was in July. Most are looking at we're going to end 2022 between a 3 and 7% home price appreciation overall, and that's going to fluctuate on different markets. Boise's probably going to be down. Phoenix might be down a little bit. Some of these other markets in Florida, well, depending on what happens with the hurricane and what that does to the values of homes there. But the Florida market was still pretty hot. The interesting thing is this: that even with a 15 to 20% decline in values, we're still not below the 50-year trend line, which is about 3.4%, I believe. So there's a lot of panic happening. And it depends if you go on YouTube and watch some of these videos. A lot of people are peddling panic. They would accuse people like me trying to look at things through rose-colored glasses. But I'm really looking at it realistically, data-driven, reading a lot on the underlying data around the housing market. So here's where I'm seeing it at. You were looking at probably a recession in 2023, maybe into 2024. We're looking at higher interest rates. We're looking at higher cost of capital for investors. We have a lot of people sitting on the sidelines. We have upwards of over 85% of of mortgages were below a 6. Now with interest rates above that, there's even more. 25% of all mortgages are below a 3. So you don't have a lot of people that want to sell their house right now. It makes total sense. You have more inventory because there's less buyers. You have fix and flippers that have pulled out of the market because you don't have home buyers in the market. You have investors that are uncertain about what to do because of the cost of capital and floating rates. You have small investors that are pulling back because of those same reasons. But what you do have is we have a huge demand for homes. You have a huge demand for people that would need a house to live in. They may not be able to afford to buy a house, but they can rent a house. You have upwards of 10 to 15%, depending on market, of sellers deciding to rent instead of sell. Much different than what happened in 2008. A lot of these people let their home go into foreclosure. They didn't know what to do. They didn't have equity. You have, on average, I think, even if we lose 10 or 15%, you have an average of 30, 40, 20%, depending on the band of the homes, of equity in their houses. So you're going to see less foreclosures. Yeah, you'll see an uptick in foreclosures, but you're not going to see a tsunami of foreclosures. So you have all of these different things happening. But the underlying thing is that even if house prices decline 10 or 15%, I still look at that as a correction. Now, have the goalposts moved? Yes. When you're looking at the 50-year trend line of house price appreciation, I would say a 5 to 10% is just a correction. But when house prices went up 30, 40% and more in markets, a 15 to 20% correction is just that, a correction. It's not a crash. The whole housing market is not crashing. There's too many fundamentals and too much demand for homes that are needed there. Now, go into single-family rental and go into the demand for single-family rentals. you have a lot of money on the sidelines, a lot of money that are waiting for maybe not the bottom of the market, but the market to hit a certain dynamic that they're jumping back in and buying homes to fill the need of rentals. And this isn't just institutional investors. This is mom and pop investors. This is everyone. The deal still works. What we're seeing is a lot more people putting more equity into a house rather than so much debt, and then that'll change over time as we see that the capital markets stabilize and the cost of capital go back down, maybe after 2023 or so, or maybe in 2023. It depends who you talk to. So is it a good time to buy? If the deal works today and it cash flows, it will. It works. So I wouldn't say, pull everything out of the market, don't buy. But a lot of people are being careful and looking at what's going on in the market and trying to decide what they're going to do. So that's all I have for now. One last thing I'll say, when you look at rents and you see apartment rents declining, that typically doesn't happen in single family rents. Leave a comment. Tell me what you think. I'd love to hear what you're thinking about the market, and have a great day. Thanks.